How's it going, everyone? Welcome to today's trading. Please, as a disclaimer, this is a paper trading account, and whether or not I take it on my funded accounts or my personal life account, it's not financial advice. It's me just showing how I trade and what I see in the market. Remember, trading has a high risk amount of losing capital, so trade at your own risk. So we're currently on a daily time frame, and the market is just consolidating. And so at times like this, we are not aiming for liquidity runs. We're not aiming for high profits. We just want to go in and get out as quick as possible. Overall, I am bullish. I want to see higher prices, but then just like I said, you come into the market having a bias, but you're just really looking at the market to show you what it wants to do. So we'll go over to our 1 hour time frame. This is the Nasdaq 100, and this is the S&P 500. So currently, previous day's low has been taken. This is Monday. Monday's low has been taken, and the market is currently bullish. So I am looking for these highs to be taken. I'm looking for the market to get to these highs, which is previous week Friday high. So this is where I'm expecting price to come. So wait for 9:30, markets open, and we see what we get. Okay, so if you ask me what I want to see today, I'm looking for bullish prices, higher prices, but then based on my model, I would like to see some form of liquidity swept before the market trades higher. So if we go over to our 6 hour time frame, we can see we have a candle 2, candle 3, and candle 4. So this is our candle 1, 2, 3, and this is 4 playing out until 12 o'clock. So I'm looking for higher prices. So remember this 6-hour candle, whatever happens inside, you have a 1 hour time frame, a 30-minute time frame, a 15-minute time frame. All of them are playing inside this 6-hour candle, and this 6-hour candle is currently bullish, including here. So this 6-hour candle is currently bullish. So we are looking for higher prices. Now, when you look at the candle, we want to remember that buying close to the open of the candle is always what's best for us. We're constantly looking to buy close to the open of the candle. So even if we get the market retrace down here, doesn't mean this 6-hour candle cannot remain bullish. So always keep that in mind. So we go back our 3-minute time and 3-hour time frame. And so this is a 6 a.m. open. And so this will end around 12. So this is also a 3-hour candle, and everything inside is playing inside. This 3-hour candle is bullish. You just swept some liquidity, but we are expecting some bullish continuation. So it's also the same thing here. This is what created the SMT. It took this 3-hour candle and it didn't take from this 3-hour candle. So let's go back to our 1-hour time frame. So we are just looking for some form of accumulation, manipulation inside this 6-hour candle, and we want it to trade higher. So this is the beginning of the 6 a.m. candle. So we want it to drop as close as possible to the open of the 6-hour candle. So we'll just keep looking at price. We'll go over to our 5-minute time frame. This is our open, 6-hour open. So we're just looking at it. So this is 6, 7, 8, and now 9. So 9:30. So if what I would love to see is continuation, but then I also love to see some level of previous 1-hour candle liquidity sweep below the open of the 6-hour candle, and then some level of market structure shift and trade to the upside. So that is what I'll be looking for. Now I am currently using 5-minute charts, but I have 1 hour, 2 hour, 3 hour, and 6-hour charts open on other screens, other monitors. So I am looking at the higher time frame, and I'm trying to base my trade off the higher time frame. So the 1 hour and the 5-minute time frame is just for me to see how the 1 hour time frame is going and what lower time frame liquidity is taking. But the trade is based off of the higher time frame. So trading is something I would always encourage everyone not to rush. I look at the market very simply. The market can only do three things. It can go up in price, come down in price, and it can consolidate. Those are the three things for me market can only do. And so I use the market buy and sell model to trade the market. And so currently we have a buy model that was completed based on the higher time frame. And now we're looking for some level of continuation, or it could also be a retracement lower. But for the market to continue, if you look at the market has V-shaped trades. The market is constantly trading on the V shape. So you see this V shape came up, took this sell side, came down, came up, took this buy side, and then it came down again V shape and went up again, another V shape. It came down again, went up a V shape, and now we have a V shape upwards. And because we're looking for higher prices, we're also looking for some level of V shape completion to the downside, which is sweeping liquidity to the downside before going up. So if we get this liquidity swept here, it'll be a very good thing because it'll be a continuation, a completion of this market maker sell model. So this will be my mid original consolidation that is being swept. So I would love for this to sweep, which is also this. So I'd love for one of them to take and also perhaps create an SMT for me to trade the market higher. And it will also drop the market to the close to the open of the new 6-hour candle open. So if you're just looking at this, what this indicator is, it's just simply the ICT Q zone and pivots. I just customize the settings and I look at the market with 2-hour, 1 hour, and the 3-hour and 6-hour candle. So each of these boxes is 2 hours. So this is 6 to 8. This is 8 to 10 and 10 to 12. And so for me, my accumulation, manipulation, and distribution happens between these 2-hour candles. So I'm looking at it from that perspective. It's also a little bit of the quarterly theory concept that I'm using. But instead of dividing it into 4 quarters, I'm dividing it into 3: accumulation, manipulation, and distribution. But I'm also keeping the quarterly theory concept in mind because I trade off of that. It's the whole concept of my 2-hour candles being divided into 3, which is the 6-hour candle being divided into 3. 2-hour candles is based on the quarterly theory concept. So that is what I am doing. So I would love this market to just continue from here. But then if you look, we are above a lot of the true opens on the quarterly circle. We're above true opens of each candle. And we've taken a major, let me go over to the 6-hour time frame so you see what I'm talking about. So we've taken this swing high on the 6-hour candle on both assets. And so I would love to see some level of drop down, take some 1 hour, 2 hour, 3 hour liquidity, and the market move up. So I'm looking for this highs. Because if we also take the discount price of the premium discount of this leg, the market has already traded. Okay, let me just do this so you see. So this is discounts. So you see we already tapped into discounts. And if we also come down here and we do the same thing, so we already tapped into the 50%. So I'm looking for continuation. Okay, and if the market does not give me the continuation, then I'll just stay away from the market today. But I'm looking for higher prices. Okay, so I'll just keep this here so for reference, and then I'll go over to my 5-minute time frame. So why this looks appealing that it just wants to keep going high, I wouldn't like to trade this higher. I would really, really not like to trade this higher. I'd love to see the market form some kind of consolidation with the 1 hour time. Let's use the 1 hour time frame to explain this a little bit better. So I'd love for this 1 hour time frame to be some level of consolidation. So I don't mind to see this 1 hour candle just remain like this, keeping this fair value gap open, and then 10 a.m. opens, come down, take the low of this 1 hour candle into the 1 hour FEG, close to the 6. This is the 6 a.m. open, so you can trade lower a little bit or stay in here, but close to the 6-hour open, and then just move up. So it's literally the same thing I'm looking for. Yeah. So if you ask me right now, if I'm to scalp, I'm looking for short to stay within this range, but then it's not a good trade because I am looking for higher prices because I have a higher chance of price coming up here and giving me a better run than just to trade in between this little gap. And this is where a lot of people lose money. This is where a lot of people lose money because they're just looking for this little scalp. One thing I would say to you is this: the reason why people scalp, from my perspective, is because they just want to get in and out of the market without really being patient enough to trade with the higher time frame bias. And so when you're just looking for that short move to make your money because you're not confident on where the market is going, you open with a big size position, and then the market, if it goes against you, you can blow your account. So you need to be patient, and you need to have the higher time frame bias in mind and trade with it. So you can trade with a small contract, but because you have a wide range and you're expecting the market to go to, you get a better you get a better risk to reward. So instead of looking for short little scalps between this range, a better way to get a higher one up. Okay. So we are waiting. Go back to our 5-minute time frame so we can see what the market is doing. Okay. So it might look random to you, but the market is not. So if we look at this, the market just took this is a higher time frame, 6-hour sweep. The market came up, it came down, it created little liquidity here, another small V shape on the 1-minute time frame. So we go over to our 1-minute time frame. So this little sweep becomes this little 5-minute V shape becomes a little bit significant. So it came up, came down, took the lows, came up again, took the highs, and now it dropped. Okay, so if this is to continue, we want to see how this can drop price lower towards either this sell side before we have a continuation up. So that is what we are looking for. Now, as part of training, a lot of people don't talk about this, but there's something unique about trading that a lot of people don't know. Trading is not something you have to guess. You just have to have enough practice and trust in your model. So for me, I have significant levels based off of the higher time frame that I'm looking to hold. So I'm looking for a point A to a point B. And my point A is a higher time frame key levels that I'm hoping the price will react off of. and then points B being my drawn liquidity. And so I am looking at my higher time frame. I'm saying, okay, this higher time frame liquidities, that is my point A, has been is being respected, and as long as it's being respected, I want price to continue going higher. And so that is basically what I'm looking for. So I'm looking at my 1 hour time frame, and I don't want to put a lot of drawings on the chart so people don't get confused. But I am looking at the higher time frame, and I'm looking at the price, how it's respecting my key points based off of the higher time frame. Okay, so if you ask me for going over to a 1 minute time frame, this is a 1 hour SMT for price to drop lower. So we have a 1 hour SMT, a 5 minute SMT here, and price can use that to go lower. So we have SMT with S&P 500. So for me, price could use that to go lower, but I'm not interested in shorts. I'm not interested in shorts. So this is S&P SMT with SMT with. Thank you. And I also trade using the XX45 to XX15 macro windows. So you also want to keep that in mind. Okay. So this is our V-shaped pattern for 5 minutes. So if we come over to this, so you see this is a V-shaped 5 minutes. So this sell side has been taken. And now we're looking at this and say, what is price doing? Is price willing to continue higher from this level and just keep going up? Or is price willing to respect whatever liquidity? So for some people, this will be the series of up close candle that took this liquidity. So is price willing to respect this other block and come down? So the SMT has been created inside this other block and drop down. So some people will be looking at it from that perspective to drop down to this sell side liquidity. So those are the things we're looking for. So price just came again, swept this 1 hour and 1 minute buy side, completing this 1 minute V shape. So now we're going to look at this and say, okay, is price willing to respect maybe if it creates a fair value gap to continue or higher, or is price willing to come down, manipulate a little bit lower? So because this is a paper account, I'll take a trade just to show you what I am looking for. But if price disrespects my 1 minute key point that I'm looking at, although I can't explain it because it's my model, I'm not yet ready to explain it to the internet, but I'll take a sell to this lows, okay? So I'm just looking at it, okay? I'm just waiting to see how price reacts. And it's already giving me what I'm looking for. So I'm willing to take a sell. I'm just waiting for the candle, this current 1 minute candle closure to confirm that my bias is correct. And I'm happy to take this sell, even if I'm currently bullish, because price is currently at a premium, okay, of my 6 hour candle. So yes, I'm willing to go short here. Okay, I'll pull my stop. I'll use the 5 minutes high, and then I'll target this low, and I'll take some partial off here. So I'll take about 25. I'll take 3 off there. Okay, and now so we wait. We wait to see if the way we're looking at the market today is corresponding to our bias. Now, a lot of people would ask, why didn't I use this high, this swing high? I'm not someone who pushes it. I'm not going to use this high because this can also be a 1 minute sweep, the market can come and sweep. I'm using this 5 minute swing high that created the SMT. So I'm using this 5 minute swing high that created the SMT. So I'd always encourage everyone to use the higher time frame swing highs as your stop loss, your stop levels, instead of using the little 1 minute time frame. So I am trying to trade within this 5 minute sell model. I'm using this 5 minute sell model to trade. Okay, I am overall biased, but I'm using this 5 minute time frame to trade. And if the market comes down to my true open, I'm also going to take something off. Okay, so I'm looking at the 1 minute 5 minute V shape. Let me mark this out so you see. So if I okay now where is that? Okay, so this is my market maker buy model, and then this is, let me just change this to black. This is my market maker buy model, and this is my market maker sell model. Okay, I think I'm not here. This is my market maker sell model off the 5-minute time frame. Okay, so let's change this to black, and I'll change the text to this. Oh, let me see, red. Yep, so I'll change this to red, and I'll change this to this, so it's a little bit more visible. Yeah. Now, a lot of people would go over to the 5-minute time frame, yeah, which can also be correct, because when people trade the market, some people make money while other people do the same market. So a lot of people can come down and look at this and say, okay, this is. Let me go over to the 1 hour time frame to show you this. So a lot of people can see this. Okay, I'm looking for a continuation of this 1 hour time frame. Yeah, I'm looking for a continuation. So I'm looking for some form of 5 minutes market structure shifts or CFD, CISD, then the market will continue this 1 hour bullish candle. But I am looking at it quite differently, because this 1 hour candle took liquidity. So it doesn't have any liquidity. It doesn't have any reason to just keep pushing higher. It already took a major 6-hour liquidity, which is this. It already took a major 6-hour liquidity on both assets. So it needs to retrace a little bit before the market will continue higher. So I am trading off of the belief that the market would come down, take some form of sell side liquidity before it continues. Because I'm also looking at my 6-hour time frame. Remember, I told you my 6-hour time frame, I'm looking for, I divided into 2 hours, which is the accumulation manipulation before the distribution. So if this is the accumulation, I need to see some level of manipulation. It might not manipulate to the lows, but I need to see some level of manipulation inside this before the market continues. But I'm very bullish. That is why I said that if this 1 hour candle consolidates, I need to see the manipulation come down inside of taking this low, this 1 hour candle, which is the 10 a.m. The 10 a.m. open take the 9 a.m. low, which is the manipulation before it continues higher, and then it will manipulate either taking a key level, which is the 1 hour's low, and also into a fair value gap before continuing higher. Yeah. So we are patient. We're just looking. And often, a lot of people look at the market and just expect the market to do what they want. They expect the market to just run immediately to the direction they want. Well, it doesn't really work like that. The market does not run immediately. When we're backtesting, we have the tendency of just keeping price, and the price will just show us what we want to see. If it's giving us a loss or if it's giving us a profit immediately, but it doesn't happen like that in real trading, in live market, because you can't forward the candles. You can't take the candles back. You have to just let it play out. And the highs, the up and down, the fluctuations, what makes the market move. So you have to wait it out. My 1 minute key level has not yet been disrespected. That is why I still believe the trade will continue the direction to the downside. And I'm not marking it out on the charts because it's my model. And just like I said, I'm not willing to put it out there on the internet already. I'm not yet ready to. I trust my model, and that's why I'm still holding. So the higher and the 5-minute time frame is 5-minute time frame key level that I have is still respected. The 1 minute key level is still respected. So I still have confidence in this particular trade that I took. So remember what I said about V-shaped patterns. Okay, so we have this being a 5 hourly V-shape that has been completed, and then we have little buy and sell models occurring inside the chart. So we have this one that was taken, the 1 minute. We have this minute that was market maker buy and sell model that was completed, and then we clone this and we clone again, and we have this one that was also completed here. We have this one that was completed, and now we have this one too that was completed. And then disrespected. So I'll clone this again, and I'll take this here. And then I'm looking, that is what I'm taking my first profit here. I'm looking for this to be my next draw liquidity for the 1 minute, because just like I said, the V-shaped pattern drop. This created the SMT. So I'm looking for this to complete. And if this holds, I'm looking for it to come down to this. Now, if you look at this, there's also another liquidity here, which is this liquidity before the before our true 6-hour open. Let's see this one here. So this is 6 a.m. open. So this is based on quarterly theory. This is the true open of the 6-hour candle. So this is my true open. So anything above it, I'm looking for sales. So that is why I took this short, hoping the market will come down a little bit to the side before going up. Okay, so it's nearly 10 a.m. Let's see what the market wants to do. So the 1-hour candle is nearly done. We have just 1 minute and 44 seconds to it finishing up, and then 10 a.m. opens. So what I'm looking for is this to be the accumulation market. So this is 1 minute, this is 1 hour. So this is 9 a.m. So to 10, and 10 o'clock is here. Okay, so I'm looking for this to be some level of manipulation. Accumulation, the market to manipulate below it before it continues higher. Okay, and then my 1 minute key level is still holding. So I'm still having confidence in this trade based off of this SMT, and my 1 minute key level is still holding. So I'm looking for 10 a.m. to open, drop down, and continue higher before it continues higher. So let's see if the market will give us what we're looking for. So 10 a.m. just opened. Just so you'd understand, one of the key levels I'm using for this 1 minute time frame, just one of my model, is to show you this. This is one of my key levels for the 1 minute time frame that I'm saying is still holding. So this is the purge, a 1 minute purge. Okay, so 1 minute swing purge. So this 1 minute swing purge, taking liquidity is still holding. So that is why I said I'm still here. Okay, so this 1 minute swing purge is still holding. So it's literally the same thing if you come over to the the S&P 500. So this is the purge, and the purge here is still holding as well. So this is what I'm one of my model, the sequence I'm looking at. That's why I'm still confident in the trade. The purge is still holding, although the purge is just my invalidation level. So I have a key level, which is my point A in the 1 minute time frame. So this I have my point A, which are just like I said, I'm not willing to share yet, and I have my point B. Okay, so my point A is still holding. My point B, my invalidation level is the purge, and it's still holding. And then I'm just going to modify this to 4 because this is the low of my previous 1 hour candle. So the price can take this before going up. So the price can just come here. Once it purges this, it can as well run up because it has taken the 1 hour key level, which is the manipulation. So I'm looking for manipulation to form some level of purge here before going high. So I'm not concerned about this. I just want the purge to happen. So you need to be confident about your model. You need to be confident about what you want to see in the market. The market is literally what happens on the higher time frame. It's the same thing that happens on the lower time frame, but on a smaller scale. And so you should be able to look at it and say, okay, this is what I want to see. So at this point, I'm going to reduce my risk. I'm going to put my risk down here. Yep. I'm not going to go break even yet until the first liquidity is taken. The first take profit is taken. Then I'll go break even. But remember, my original concept, my original bias is bullish. Original bias is bullish, but I just had to take the trades to show you that some people scalp the market because of these things. But this trade is not an A plus setup. It's not even a B plus setup because I could totally have been. I'm not trading with a higher time frame bias, and it's easier to trade using the higher time frame bias. You have more confidence with the trade when you're trading with the higher time frame bias, and whether you win or you lose, you're happy because you stuck with the higher time frame bias. But remember, your ability to be able to look at the market, understand what is happening like this, is what helps you to know if the higher time frame bias, the original one you have, is still going to play out. So now I'm looking at the 1 hour and 1 minute time frame, and it's showing me exactly what I want it to do. And so when I get a reversal or a market maker shift towards a buy model, which is my higher time frame bias direction, I'll be more confident to take it because the lower time frame played out exactly how I want it to play. So I'm going to go break even here, and that's taken. So I'm going to break even there, and this V-shaped makeup buy and sell model has been completed. And I'm just going to get out now. I'm not going to hold this trade, I'm getting out. Now, the reason why I'm getting out is I'm not pushing it. I never intended to push it. This is my accumulation phase, the 1 hour. So if we go over to the 1 hour time frame, this is the 1 hour time frame, the 1 hour candle. I was hoping the market manipulates below into this fair value gap. So now it's created a fair value gap here. So if this fair value gap holds, then I would be looking for another market maker buy model from this fair value gap, which is my point A. Just like I told you, I look at the point A to point B. So this is my point B. This is my point B. So this is my point A. Also under a previous 1 hour candle low to a point B. So this becomes my first profit, my first low hanging fruit if the buy model is to continue. So if the buy model is to continue, this will be my lowest hanging fruit. Okay, come on, where are you? This is my original consideration, my lowest hanging fruit to the upside. And we also want to bear in mind that there is an SMT here now between these two assets. So this previous 1 hour candle low was taken and was not taken, and this one has been taken on the on NQ. So if the market reverses from here, I'm willing to continue my buy model to the upside. And I'm also leaving room. I'm also leaving room for this to trade lower. Okay, I'm leaving room for this to trade lower to take this sell side. And now when I look at it like that, I'm looking at it from the perspective of the 6 hour candle. Okay. If it trades lower, I'm not going to say okay because it traded lower, this 6 hour candle is bearish. Now inside the 6 hour candle, we have a 3 hour candle. And so if this trades lower and takes this low, it's just a 3 hour candle low is taken. And so it can also continue higher. And so you see there's this little fair value gap here. So if it comes and take this low, it can also be a means to continue higher. So if we go over to our 2 hour time frame too, you see this is a 6 a.m. candle open. So these are just the lows the market is going to take into this fair value gap, and it can continue higher if we get the market structure shift to continue higher. But to confirm this, I'm going to be using my 5-minute time frame. So this is my first point of reversal. If the market does not reverse from here higher, I'm also looking at this as my second point of reversal. Now, if market does not respect this point and it continues going lower, I'm not trading anymore because just like I told you, I have my point of interest and then my point of invalidation. So this is my point of invalidation. If the market comes here, does not form a market structure shift to the upside, I'm not trading because I have a bullish bias. So this is my low. So and it's also a swing. So 1, 2, 3. It's also a swing point. So it's I'm gonna put this here. Sell side. This is our sell side. Okay. So currently we're seeing it's trading lower. trading lower and it could complete this entire sell model to this. And now remember, it's below the true open of the, so this 6 hour candle is becoming bearish. It's coming towards the open of this 6 hour candle. So, and we want to be buying close to the open, close to the weak, below the open or close to the open to continue higher. That's when we get good risk to reward. So this is the true open. Yeah, this is the true NY open, the true open of the 6 hour candle. So market just came down here, tapped it, and so if the market chooses to reverse from here, I'm still willing to take the trade. Remember, it has also created another SMT there. So it has created this SMT now. It has created this SMT between these two pairs. So it has created this. So this liquidity tool has been taken, just like I explained earlier. This liquidity tool has been taken. If you go at a 1 minute time frame, so this liquidity tool has been taken. Now, a completion of this higher 1 minute market maker sell model has been completed. So this was after price created this swing, was when it took this 1 minute V shape buy side, completed it before taking the higher time frame 6 hour swing high as well. So this is a completion, a total completion of the 1 minute swing here. So if this 1 minute swing is respected and it wants to continue, just like I said, and it's also now below my true open, my true session open, I'm willing to take, because it's also close. Look at the 6 hour open. It's also close to it. I'm also willing to take this trade. But I'd love to see this come higher. I'm happy to see it come down, take this 2 hour candle low as well, then turn. So this has been taken. I'm just going to come down and say this has been taken. This has been taken. Now, what does the market want to do? Now, why it took this big, the original 1 minute sell model, it also created a small second sell model here, which is this. So you want to start looking, since we're looking for higher prices, you want to start looking what this price willing to do. Is it willing to respect this? So if we come over to our 15 seconds, so you see this is also a sell model that was done. And so this becomes a swing high. So we have this as a purge as well, just like I told you. So we have this as a purge. The price getting into a fair value gap, took this purge, and so we have this purge. This purge is what we're looking for. I'm just trying to explain my model and what are some of the things I'm looking for. If I want to take a 1 minute reversal to the buy side, I have this purge. Where is that? Where is that? Where is that? So I'm just going to use minutes purge. So I have this purge as a validation level. Okay, if price disrespects this, I'm more likely to take a 1 minute long. Okay, so I'm looking at this. I'm looking for displacement above that. So this is my validation level for price to continue high. So as long as this is respected, I'm not buying, because price can still run these lows to complete the 5 minute sell model. So this is my 5 minute sell model. So price, this is my higher time frame 5 minutes sell model. These are little sell 5 minute sell models. So this is also my major form of interest. If price takes this and form even a 1 minute reversal to the upside, I'll take the buy. But price can still take this, so I'm cautious. The only reason for me to really confirm a buy from this level is if I get a 5 minute change in the state of price delivery inside here based on this range. Now, if I also put my premium discount on the 5 minutes, so we see we're already on the discount, so I can take it, but I would love to see a 5 minute shift, not a 1 minute, to be honest, if I'm being honest with you. If we also come to this, we see price also make the same. So we're already at a discount as well. Yep. So anything that happens from here. Yeah. Our pod is still holding. Okay, so we have a 5-minute low that just was taken, so I'm not willing to buy. Just like I explained to you, I'm looking for bullish prices. I'm willing to long now. We also have a SMT, 5-minute SMT. So we have a 5-minute SMT here. Yep. We also have this. So price came down and took the previous 2-hour candle low before changing directions. So put my stop here. Now I'm putting my stop here. This is the low of the 5-minute swing low. This is the low here. Okay, so I have my structure shifts. So now if we go back to 15 seconds, just also explain the concept for you. So we see this MMX sell model was completed, and now price could have come up after taking the low. Price could have come up, take this, respected it, but no, it just went up. So this becomes our purge on the second time frame, but I don't really trade in second because I do, but if I'm to help people understand the concept, I think using the 1 minute, 5 minutes is best. So I'm also going to delete this. I'm going to delete this purge. Now, I could have easily taken off the indicator just to make it more clearer, but that is not what I'm aiming at, okay? I want people to understand why I'm taking the trade, so that's why I kept it. I could have just easily kept the chart as clean as the S&P 500, but I decided to keep the chart, so the indicator rather. So this is our 5 minutes, yeah? So our 5 minutes market maker buy and sell model has just been completed. We also have a 1-hour BC that the market traded into, and I'm hoping price respects this and continue. We also have the market trading below the 6-hour candle open into the 6 hours week that was created before, and so we want to see the market continue trading. So I'm just going to take this. Now, just like I said, I have my model, and the reason why I entered this trade is because my first model has been formed. Okay, my first model has been formed. My first point A, after the market swept the 5 minutes swing low, which is completing this 5 minute sell model. This is the 5-minute buy, 5-minute sell. After completing it, the market did something that gave me the confidence to enter the market. It created my first key level of the 5-minute time frame, which is the same model I use if I'm trading higher time frame. So I'm trading the lower version of it. So this is the 1-hour point A. I'm still going to hold that. Remember, just like I told you, this is my validation level of this trade, and I'm keeping it here. If price disrespects this, is my validation, then I'm not, this buy side trade for me. It's not what I want to do today. So my first minute, my first 5 minutes key level is being respected. I'm not expecting, yeah, we can have some level of resistance here. This is a 5-minute CB. So we can have some level of resistance here, but I'm not looking at this as some form of point of interest that will hold. So this 5-minute CB. I don't want to see this hold. I want to see it be disrespected and price to continue going higher. So this is our minute CD. So if we come over to our 1 minute time frame, yeah, let's use the 1 minute time frame to look at this chart. So we also have a 1 minute CB. So this is our first. So some people would use the inverse of this. So this is our first inverse fair value gap, and then they'll trade off the inverse. But since I use the market maker buy and sell model, I'm looking at the left side of the curve. So we have this first CB that was respected, which is also our 15 seconds purge area high. So this minute CB, 1 minute CB. I want to see this being this disrespected. Use as support to continue trading higher. Yeah. Now it's okay to also go over to the 2 minute time frame to see if we have fair value gaps there. So now I'm going to use this. Was this 5 minutes? Remember, this is our 5 minutes. Okay, I said month. It's not a month, sorry, it's minutes. I think I have. This is month CB. Did I? Oh, I think I changed this now to my instead of minutes and months. So I'm sorry about that. So this is minutes. I think I must have. This is minutes. Let me look at visibility. Yeah. So yeah, that was cool. I don't want to see that there, and then save as minutes. Yeah, minutes CD. Okay. I'm also going to do the same thing with this. Minutes CD. Yeah. So I want to see my key levels hold even though it's a 1 minute key level and a 5 minute key level. So let's go over to our time frame again. So we're looking for bullish prices to continue higher to this. First take profits, second take profits, a validation level down here. My first 5 minute reversal key pattern has occurred. Just like I said, I'm not willing to share it on the internet right now. So I want this to hold. So we don't have any 1 minute fair value gap apart from this one here. 1 minute CB that held. So we have a minute CB here. So I'm just looking at this left side of the curve. I'm looking for every CB that price is expected to go lower. And I want to see it be disrespected. So we have this 1 minute CB. I want it to be disrespected. So remember, if you're taking an eval, if this was to be an eval account, you're always encouraged not to use the mini to trade. Always use the macro. Now, when you're trading with the macro, you have, just like I'm able to look at the market and analyze it the way I'm analyzing it, you're doing the same thing. And then you're looking at levels where you can partial. Okay, you're looking at level, you're looking at level where you can partial and then also scale into the price to the market. So this is already 2.5, which is 2,500. And if this was an evil account, it's an evil account. Now I'm looking for these key levels to be respected, and I'm also looking for where to scale into the trades. I have good room for this market to run. Okay, so I want this 5 minute CB to be disrespected by the 5 minute candle, and once it does, I'll bring my my trade in, my stop loss in, and then I'll look for ways to scale in. So if I go over to our 2 minute time frame, I have this 2 minute CB that price used to trade lower. So this is also a minute CB that I want price to use as support. Okay, so that is that. And 3 minute, yes, it's also there's also a 3 minute CB here, so that is good. I'll use that one. And so price is just shooting higher. Okay, price is just going higher. So I'm willing to come down here now on partial. I'm ready to come a little bit high with my, and then I'm willing to come down here and I'll use this skill level, and then I want to add to this trade. I want to scale into this trade, so I'll scale in with number 3. Okay, so this is 1,000. Okay, so if the market comes down and I'm using this 5 minute CB that price just disrespected, I want price to respect this and continue higher. So that's why I placed my entry here. So I want price to come down inside this 5 minutes. I have a 5 minutes, a 1 minute fair value gap that I want price to trade into. Respect this. So respect these 2 CBs before going higher. So I'm also willing to push this a little bit higher. So this is my first. So I think I'm willing to now break even on this one. So I'm willing to go break even on my first entry position, so I don't run a loss at all on that. Remember, this is a paper trading account. I know how I manage trades on my real accounts. So on my real accounts, I've already taken off some profits. I'm not trying. I don't have a fixed target that I want to see the market hit. For me, real trading and real life accounts is all about making money. And if I see 1,000 plus on the streets, I'm going to take it and save it, put it in my pocket. I'm not just going to let it lie there. So the market has already given me 1,000 plus, and I'm not just going to let the market come all the way back. Take me out on break even on my real accounts. And the prop firms don't operate on that level. The prop firms operate on you making capital. And so based on also the prop firm rules about the amount of money on the 50K accounts, 1,002 is the maximum you could make, so you don't breach the percentage barrier. So on my funded accounts, I'm already out of the trade. Just like I said initially, I'm not giving financial advice. Then on my real personal account, I'm still holding. So just so you know. Okay. So we have some level of resistance. Remember, these were 2 minute CBs that price used to respect the sell model to trade down. So of course we're expecting some level of resistance when we go here. But then, just like I said, I still want this 5 minute CB that was disrespected. tries to use it as support to go higher. So this is now an inverse. But remember, I got my confirmation way down from here. Just like I said, I'm not willing to share my what I saw, my model, why I entered, why I'm confident enough to say, okay, my 5 minute key level has been met, key expectations have been met, so I'm willing to start going higher. But I did give some, and one of it is the trade into this 1 hour accumulation. So I'm looking to the market to continue to complete this buy model. Okay, I'm just going to come here and put my settings. Nope, this is not what I'm looking for. I'll come down here, settings, trading, and I'll say institution X, and I'll apply this. Now, if I take my measurement tool and I check the discounts of this leg, so we've got into a premium, okay? So that is why I chose to buy at a discount. I'm not chasing the price. And remember, you want to look at evaluations as something you don't have to pass on a single day, but you can if you want to. Okay, you can if you want to. So we're already at a discount. We've already moved rather to a premium. So I want to see market trade to a discount, and I want to see this 5 minute CB that was disrespected to be a point, and this 1 minute CB to be a point that the market used to just keep going higher. Okay. Seems price is not willing to do that. We have to be patient. What you say? When you say that, you know, some song is from them. So do not get lost when you're trading, when you lose the whole concept of who your buyers coming in today. That is what makes you to keep clicking the button, expecting price to react from random areas. When you're trading, try not to get lost. And that is one thing now I'm beginning to encourage people to do. Get more than one screens and you're looking at the higher time frame. Everything you're doing based off of the higher time frame. Do not get lost in the lower time frame. The lower time frame reacts based on the higher time frame key levels. And if we go back to our 1 hour time frame, remember this is our 1 hour key level. It also swept a consolidation. This is our consolidation. And this is because we are expecting higher prices. We've taken Monday lows. We have a change in the state of price delivery, but I don't use the state of price delivery as a means to enter the market. I have key areas. I don't trade off the change of state of price delivery. I have reasons why I enter the market. And so I have seen my reason and said, okay, it's already taking place, so I'm looking for higher prices. This was my initial draw liquidity. The market has taken it. I need to see some level of consolidation, which is a market maker accumulation, manipulation, distribution. And so I am not expecting the market to trade all the way lower anymore. So I'm looking for the same accumulation, manipulation inside the current candle. And I'm trading off of this 6 hour candle. Okay, so this 6 hour candle, I'm looking for my accumulation, manipulation inside of it to trade higher. So that is what I'm doing. So, okay, so I'm just going to take this. So we're now in the trade again. So we just scaled in, and I want these two levels to hold to come higher. Okay, so if this is an evil account, you want to pass your evil in one day, this is the way you can do it without risking too much. So even if this trade comes and goes against our bias, we've only lost 500, I'll say 600. We've only lost 600. And then if we look at the market and we choose to go again, We can do the same thing, also risking the same amount. We can start from maybe risking 400, which still puts us at a 1,000 loss for the day if we still lose that trade, instead of taking one trade and blowing the account, or getting to the max stop out for the day with just one account. You don't have to do that. You just need to look at the market. Is it working out the way your model says it's going to work out? And then look at areas you can stay in. So the market is dropping. A lot of people say this and you're worried. You shouldn't be worried. You already have key levels you're looking off. And just like I said to you, you have your point A to your point B. So if we look at this, this is also a V-shaped pattern. So we have a V-shaped pattern from here to here. Okay, let me mark it out so you see. So we have this V-shaped pattern happen here. So this was our V-shaped pattern, another V-shaped pattern. It took the higher time frame key level. Now it took this first V-shaped pattern here. Okay, so this is the first V-shaped pattern. I'll clone this. It came down to this key level, took the V-shaped pattern here, came down, took another V-shaped pattern and swept, created a purge. So now this is my key level. I don't want this purge to be disrespected. This is gems I'm sharing with you guys. I don't want this purge to be disrespected. This is the purge. That's why I placed my stop below and close to below. Now it can come and sweep this liquidity, but this is my key level. I don't want this to be disrespected. This minute purge, I don't want it to be disrespected. So it came and it took this high. So it took this high. So I'm going to put this here. We completed this V-shaped pattern again. So I'm just going to put this, and I'm going to put this as my liquidity sweep. Where is it? Where is it? Where is it? Where is it? Okay, so this is my liquidity sweep here. Okay. So I don't want this purge to be disrespected. So this is my initial draw on liquidity. I want to see this market come up here. If I want to use the 15 seconds to scalp this becomes my higher time frame draw on liquidity. So I'm looking at this. So this becomes my premium discount level. So this becomes my premium discount level. Okay, just for the sake of this, I'm going to move this to below here. This becomes, because price can come down, this becomes my discount and premium level. So I'm going to look for the same thing. This is a key level. This is also a key level that the market took bullish respects to go higher. So I'm expecting price to can come here and test this, but respect it. So this is my minute PC. Yep. So this is my mini PC. So this is my minute draw liquidity. If I'm to use the second chart, so if we go over to the second chart, you see what I'm trying to explain. So you see, this is my leg up. So this is the liquidity. The price can still take it, but price can still hold from here and keep going higher. But this is my validation level. I don't want this to be disrespected. So whatever happens here, consider this is our original consolidation. Second phase, redistribution. We can have another one here. Price comes, manipulates into this liquidity, changing state of price delivery, and then target this. So we can have this as our original consolidation. Let me just put this just so I can get the box right. So we can get this as a original consolidation. I'm just going to clean up the text so you can see it. So we can get this as our original consolidation. We can have this as our redistribution. We have another small one here into a key level. And now we also have a second purge here. And this can be respected, and price can just go higher, or price can still come down and take this low. Either ways, do not get lost, okay? In this particular case, it's a 15-second chart, but the 1 minute key level becomes our invalidation level. So this is where our stop loss is supposed to be. If we go back to our 1 minute time frame, this is where our stop loss is. So whatever plays in here, the market can do whatever it wants in here. We just want this to be respected. So the market can still come all the way down here. Okay, so let's look. Remember, this is just a paper trading account. My real account, just like I explained to you, I cannot tolerate this drop down. I've already taken partials and I've already closed trades on the accounts I need to close. And I'm just trying to explain how I look at the market. If I want to pass an evil evaluation account, how I'll trade the market. So this is still holding, yeah. Remember, this is our 1 hour key level. This is a 1 minute key level. This is also a 1 hour key level, the 1 hour fair value gap. So we have point A's, 2 point A's that we're hoping the market respects and keep trading higher. Okay, so if we go over to our 15 seconds, for example, we have our V shapes. So we have the market in disrespected, and this one didn't hold. The V shape didn't hold, but the market came, created a small V shape, took it, took this V shape, came down, created another V shape, came down, created another V shape, respecting this fair value gap, came down, and created is going up. So we want to look, will this V shape respect for it to take this low, or will it continue to go higher? Remember, we're bullish. So we are more leaning on the bullish V shapes to be respected more than the bearish ones. So this is our 1 minute key level. So we've come down to a discount of the 1 minute range. Yeah. Sorry if you cannot see properly because of my indicator. Just like I explained, I kept the indicator so you can understand my trades properly and why I'm holding, why I'm confident. If not, I'll take it off. If I'm trading on my own, I keep it because I need it, and I'm hoping you can also see what I'm seeing and you appreciate it. If not, I'm sorry about the charts being a little bit messy, but I hope you can follow through. So just like I explained, if we wanted to scalp for high scalpers, we are people who just want to scalp the market and get out immediately. This becomes this 1 minute. This is a 1 minute sell side. This becomes a 1 minute buy side. So sometimes when you see people show these cool trades on the internet, maybe on Pinterest and others, it's just this little stuff, and by the time you amplify it, it's just a 15-second, but the same market maker buy and sell model occurred. So we now have our purge. If you look at this becomes our second purge. So I'm just going to open this so you can see. So we have our second purge. So now I'm expecting for this purge to be respected. Yeah. So I can push this here now to reduce my risk. I'm expecting this second purge to be respected. Okay, so this is my purge. I'm gonna put this because this is a swing. Okay, where is that purge stuff? So I'm going to use the mini purge. So I'm expecting this purge to be respected. So we have our change in state of price livery. Yeah. So this becomes our first reaccumulation. I'm going to clone this. This becomes our first reaccumulation. So we can have price come down. So this becomes our first reaccumulation. So we can have price come down, manipulate, take some liquidity and continue going high. Yeah. Or we can just have the price continue. So this is our sell side of the curve, but to be honest, it's just a small 1 minute retracement. Just a small 1 minute retracement. And we're trading this off of the 5 minutes key levels. And the 5 minutes, we're trading it off of the 1 hour key levels, which is the 1 hour, previous 1 hour key point that was 1 hour candle that was purged. So you just need to always keep the higher time frame in mind. So we are perhaps having a second stage of reaccumulation here. Using the 15 seconds. So remember, one thing about trading, when you're trading, just like I said, the live market is not the same as backtesting. With backtesting, you can follow the candles, you can back the candles, and you can just get the satisfaction of knowing whether the market hit your take profit or took you out on a loss just immediately. But in real life, you really need to slow down with the candles and understand it. And that is the beauty. That's why some people don't like to backtest after they get their model, because real life trading is a little bit different from practicing, because in practicing you just want to fast forward, you want to get your result quickly. But in real life, you really have to be there. You want to be present, body, soul, and mind. You want to be able to recognize your model. And if you're not able to recognize your model, you can always do one thing. You can always not trade. No one is forcing you to press the buy and sell button. The moment you cannot recognize your model, do not trade. So we are having our second stage of free accumulation here. On the 15-second chart. And when you're having a accumulation, you always want to bear something in mind. The market can always come down and take this lows, this as liquidity. Like if you notice what the market did here, it just came, it took some buys, came down, it came into this key level, it took some buys, it respected it didn't take the low, and it just traded high. But in this particular case, the market took this buy, it came, it's respecting it disrespected the highs again. It took this, it can also come down and it can sweep this sell side before going high into this fair value gap. So this BC, as long as it stays open, price can do whatever it wants to do inside of it. So price can come down, take liquidities inside of it before it keep going high. So we want to see this run through. So at this point, I would move my stop to break even. So this is a risk-free trade. And remember, we have a high time frame, 3,000 in mind. So if this is an evil, we're pushing this down to this level. And we want to see price come here and give us our 3,000 and we'll pass for the day. But if price won't get there, this is a risk-free trade. I'm not showing you how you can scale into the price, into the market, and you don't have to risk a lot. You don't have to use one macro. You can still use the macro, and some you don't have to use one mini. You don't have to use 1 minute when you're trading, or 2 minutes, just because you're scared. You just want 1 or 2 moves to give you your target. You can use macros and still make a profit. So if you look at our entry to this point, it's not long. It's not a huge ask from the market. The market can still do this easily. Okay, we're not using the 1 hour take profits. Okay, we're not. So we're just inside the 1 hour range, and we're still using macro. So you don't have to risk everything. You don't have to risk one account or your account just to feel you want to pass. You don't have to. Okay, so that is that. Now, if we go back to our 1 hour time frame, 11 o'clock just occurred, and using T-Trades model, this becomes our candle 2. So we have higher time frame key level, which is 1 hour fair value gap, point A. Just like I said, always have a point A. So we have a point A, which becomes a liquidity sweep. Where is that? Where is the liquidity sweep? Yeah. We have this liquidity sweep. Where is it? I'm just going to go back here. So we have our C1, okay, into a key level. And so this becomes C2. And so we want this to just come straight to the take profit at point B, original consolidation, higher time frame original consolidation. So the market is literally the same thing. People just see the market differently. And that is why I always say to people, do not look down on anyone's model. Your inability to see what they see, and so you cannot trade it as effectively as they do, doesn't mean their model is crap. And that is why it's always important for people to look at, when you're starting, look at the model, stick with it for a while, and if you generally cannot relate to it, then you look for another model you can relate to it. But you need to give a model a fair amount of opportunity before you discard and say, okay, this one is not good for me. I've gone through a lot of models before I came up with mine. I looked at T-Trades model, Zusi, Brox, a lot of JCap, and I brought from all of them to make mine. Okay, I brought what's unique, what stands out from all their models to make mine what it is. So keep learning. And now my model is something that is unique to me, and that's why I said I'm not willing to share it yet on the internet. It's helped me to get some payouts. I'm not yet rich from trading, but I've been able to recover some of the money I've put into evals, and so I know it's possible to make profits of trading because I've taken payouts. So this is our candle 1, candle 2, candle 3. So if we come over to our 5-minute time frame, we are looking for this. All of this is just the week. So this is a new 11 a.m. 11. So 11 a.m. opened. It's creating a week. So it can create a week into this 5 minutes BC key level and then continues higher. Yeah. Okay, so if, for example, we want to trade T-Trade's model, now T-Trade will be looking for the series of down close candle as a change of price, change in the state of price delivery, which is the 5 minutes. So this becomes our 5-minute change in the state of price delivery. Now inside the candle 2. Okay, this becomes our change in the state of price delivery inside candle 2. Now T-Trades won't take this. He's going to wait for a confirmation, which is the series of this candle. The moment this candle closes, which is the second order block, T-Trades will take, because as long as he is concerned, the market can as well come down and break all of this. But when the market creates another order block, then he's on this trade, because he has confirmed that the market is willing to trade higher. He has a second confirmation. So T-Trades will wait. The new candle has opened, so this is our candle 1. The candle 2 has opened into candle 1 key level, and the moment the 5 minutes closes, T-Trade is willing to enter with his stop loss on this protected swing low, 5-minute swing low. Okay, so I am willing to come up here. Remember, our EVO is here, so if we want to pass our EVO, so even if we want to just take that 3,000, I'm going to put a mark, so you see what I'm saying. So T-Trades will enter this market now, because he has a candle to a confirmation now. So T-Trades will enter this and put his stop down here. So it's literally the same thing. So if we want to pass our EVO, we're not risking. Well, now this is trade free. This is risk free. I'm going to even push this. We are 200 and I'll say 250 profits, and this is take profit level for EVOs. So imagine you have 5 accounts that you want to pass EVO. Today, you can as well pass your EVO on one day without risking. Okay. So based on our model, based on my model, the first V 5 minutes market maker buy model has been completed. The second one too has been completed. So this is the first 5 minutes market maker buy model. We've taken our 1 minute. So this is our 1 minute key level if we're using the 15 seconds, just like I explained earlier. But it's also our 5 minute key level. So I'm going to put this here. So if we come over to our 15 seconds, so we see our 15 seconds have given us our second redistribution, and we've completed the 1 minute market maker sell and buy model. Yeah. So this is our EVO line, our 3 key line for the EVOs. So remember, I'm not going to allow 2,000, 2 grand to just lie on the table. If this my real accounts, I'll be partial by now. I'm here. Okay, I'm not trying to prove a point. I'm not trying to prove a point. Okay, I'm securing as much money as I can get. Okay, I'll take partial even if I'm not. My real accounts, my evil accounts, I'm already here. I'm down here because the market can as well. Okay, I'm just gonna put this here. The market can as well. Remember, this is now a 5-minute completion. This is now a 5-minute completion. Okay, this is now a 5-minute completion. Now this is also a 5-minute BC. The market has not really tested it out, but the market can as well go high because we see we have an SMT here now. We have an SMT. So this is our SMT. So we have our SMT here. We have our SMT here. So on this same 5 minutes, BC, we have SMT here with S&P 500. So we have our SMT here. Okay. So we have this SMT, which is this. Remember, this is 11 o'clock, and T-Trace will take this trade because he just wants to see a small wick on the candle 3. The best trace is when the candle 3 has a small wick. The rest is just going to be a huge run high. So this, remember, T-Trace will take this candle 2. This is his confirmation, second order block. So this is our first change instead of price delivery. This is our order block. This is our order block. He's going to enter here. So, and he's risking, say for example, he's looking for 2 to 1. So this becomes the trade for 2 to 1 because we have a higher time frame drawn liquidity, which is the 1 hour. This one here. So this is our 1 hour drawn liquidity, and this is exactly our 2 to 1. So this is a value trade for T-Trades. Okay. For JCap is looking for market maker a swing failure pattern, and so he'll be looking. This will be an entry pattern for JCap using the 1 hour time frame. So the 1 hour change state in principal price delivery here created a fair value gap. So JCap would enter this trade. target here, still giving you almost a 2 to 1. The low below this fair value gap, 1 hour fair value gap, because he wants this fair value gap to hold. If there's room, he can also put a stop here, but the low of this candle, this is jet cap strategy. Yeah. So my strategy is putting all these traits, T trades, jet cap, Zusi, and Brox. So I am looking for my continuations using jet cap, T trade, but then I'm able to trade with the lower time frame because I'm able to merge both two with Zusi, Purge, and reversal pattern, his trading model. Okay, so T trades, they will not like to use a 1 minute time frame to be trading all of this. They'll like to use a 5 minute confirmation. But I'm able to scale that down because I'm able to recognize for Zusi, this will be a purge and a continuation higher. Okay, now we are above most of our shoe opens. So I'm expecting the market to run and take these highs, but just like I said, but this is my draw liquidity. If price takes this, I'm just going to put on my S&P 500, I'm going to put in a line here. Okay. Now this is a 1 minute untested fair value gap, and that is why I'm also confident in okay, this is our 3,000 profit line. I'm just going to check if it's still 3K. Yes, this is our 3K profit line. So this is an untested CB. Price could react a little bit off of it, but I'm also not expecting it to hold. So this is our 1 minute CB. 1 minute CB, yeah. Untested 1 minute CB. Okay, so now I'm willing to also bring this a little bit higher. We have two CBs that have been disrespected, and I don't want to see price disrespect them so easily and just trade all the way lower. Okay, I'm putting it below this SMT, and I want to see both of these. This is a 2 minutes, 1 minute. So this is 2 minutes, and this is a 1 minute CB on the left side of the curve. I'm going price should respect both, and also this SMT, the SMT project here. So in reality, this untested fair value gap is the only form of resistance that we have. We don't have any reason for price not to just shoot up and give us our final take profit. We have no reason. But just like I said, the market will do what it wants to do. And that's where a lot of people lose their cool because they expect the market to just play out the way they want to play. The market can as well retrace back into this 5 minute fair value gap, which is this CB here. And it's not easy to see the loss. We're already up two grand, almost 3 grand. So it's not easy to see the market retrace and then come back again. Sometimes it might just retrace and you won't stop us out before it goes up. But the entire point is, if this was a funded account will be way out already because most of the consistency based on consistency rules for 50K account, 1,002 should do. You shouldn't get above that each day. So I'll be out already, and I'll not even be risking this amount. I'll be out already. Yeah. So remember how we started. If you're watching up to this point, we started by making some money profits selling, and then we're also making some profits going high and buying. So it's all about understanding the market, understanding how it works, and to be in sync with it. There are days you come into the market and you will not be able to see your model. Those are the days you want to step away. You come into the market, you want to say, okay, this I want this to happen, and then if this is created, I also want this to happen. And so you're able to get into the market seeing what you are expecting because that is your model. You're able to see it play out. When you can see it play out, do not force the trade. Today, I can see my model play out clearly, so I can speak confidently, boldly. And even if the market comes and takes me out of the market, I am happy with the trade. These are days you're happy, like you're happy with the trade. You followed your model. You were consistent. You manage. You control yourself. That's the whole point of everything. So if we want to back up a 1 minute buy model, so we can see this is a original consolidation here. Okay, I'm going to close these boxes. This is our original consolidation for the 5 minutes. I'll tell you again. This is our first stage. First stage. Yep. A second stage, redistribution. Sometimes to me all these names are just fancy, and as long as I know what is happening and I can try my best to explain to people, but at the end of the day, it's all about making money. This is our market reversal, and then this is the left side, and this is the right side, and it's literally the same thing. If you go over to your 15 seconds, you're able to see it's literally the same thing. This is your original consolidation, your first stage, second stage, changing state of price delivery here. In this particular case, it's not as the classic one people see. And that is what I said. I have to find out what works. And based on what I am able to see from the market now, I'm able to say, okay, whether the ideal ICT signature doesn't happen, I'm able to know that the market has shifted and the market is willing to trade higher. Okay, so it's literally the same thing. So, and you get your V-shaped pattern completing this. You have your second one, V-shaped pattern completing this. And then we have another V-shaped pattern completing this. And now we are here. We can have a V-shaped pattern coming all the way down to take this. So this is a buy model. We can have a sell model to this pattern before the market creates another V-shaped pattern up. No one knows. And the reason why I said it can happen is because we have key levels that the price can still come down to use as supports to go up. So, but I like what is happening here because as we can see, the S&P is just dropping and it's creating massive SMTs. It's going to give the Nasdaq room. Whatever makes the S&P to want to reverse is giving the S&P NQ room to just push higher. So it's fine for me. I'm happy with that. We have a 5-minute PC I want price to respect here, which is also in line with this other block. A series of down close candles, so price can come down into this other block. So this mini PC. Mind you, if I'm not trying to explain anything, I'm going around matching the charts like this. I already know what I want to see. I'll clean all of this, and I have everything, my levels, and I'm just looking at it and I'm trading. But I'm trying to take my time to explain this because I know I'm trying to pass information. I'm trying to pass knowledge to people to look at the market from the way I look at it. And with time, I know I'll be giving some of the gems I know, my own reversal patterns, what I look for, and why I trust it, and all of that. So the price can still come down to this mini PC, which is the 5-minute PC. We don't mind. Over time, I started understanding why ICT will take its time to explain and explain and explain. Yes, a lot of people will look at it and say he talks too much. And I thought about it too from that perspective. And yes, when he talks, he sometimes go away from the major reason he's coming to trade. You know, he goes off topic, I'd say. But then, if you want to teach someone something, you need to explain. And you really, really need to explain. And that is why I find myself even talking and talking. Usually, my day-to-day life, I won't talk this much. Okay, I won't talk this much. So this is one thing to have noticed. When someone is really, really trying to pass on the knowledge, they really take their time to explain. They want to help you to see what they're saying. So I hope you're able to watch this video. I hope you're able to understand where I'm coming from, and I hope you don't see it as too long. Currently, these days, a lot of people don't have a lot of their attention span is quite low, and the prop firms they know this, and they use it against us, they use it against people, and you won't blame them. A lot of people look at the rules set by prop firms and say it's too hard. I don't see anything that's difficult with the rules set by prop firms. The prop firms are just looking at the natural human weaknesses and using it against them. And so if you're able to look at your weaknesses, there's nothing. The rules are not bad. There's literally nothing bad about the prop firm rule, whether it's consistency or anything. There's nothing bad about the prop firm rules. It's just a natural human weakness that they know that they're exploiting. And if you can work hard to have self-control, you'll realize that, trust me, there's nothing wrong about the rules set by prop firms. So we're currently approaching our 3K, which is so if we are looking for if we want to pass our even, I'm just going to put this at 3K. Just a little extra, just so. Okay, I'll just put this. So I'm just going to take this off at this. So if we want to pass our eval, this is the eval pass for the day. So the market does give us opportunities to pass evals way often than people think, much more often than people think. But the thing is, people are not patient to trade their model. And if you notice, this is not a huge run. This is just a little run of the 5-minute time frame. But because a lot of people lack the ability to analyze the market the way I did, you think it's a huge thing. It's not a huge thing. Often you see people on the internet saying, "Oh, a basic trade for me is just 15 minutes. A basic trade for me is just 10 minutes. After 10 minutes, I should be out of the market. I want to live my life." Trust me, it doesn't really work like that. It doesn't really work like that. Sometimes we get those insane runs, and under a few seconds, the market will just take. But often we don't get that. Okay, so I can manually close this if I want to. Yeah, so that is it. Taken. I didn't close it manually. It took it take profit by itself. So just like I was explaining earlier, the market, I didn't have to wait for a huge run. I didn't want to like, okay, I'm using the 1 hour run to make my profit, because this is my 1 hour run. Okay, this is where I want to see the market. Okay, I want to see the market come all the way. Okay, not even Friday. I should be targeting Monday high, not even Friday. But since they're closed, I can't go. Monday high is my arena target. Okay, I want to see Monday high being taken. But I was able to capitalize on this to pass my eval and to also make money. So you don't need to see a huge run. You just need to be able to be patient enough to understand what is happening inside the higher time frame candles. Just like I said, we started from our daily, went over to our 6-hour candle. Okay, let me clean this chart up a little bit. I'll come to setting, I'll come this. Okay, we came to our daily. We noticed we are just ranging. Now T trade we call this, how does it call it? This is the fan method where let me just put this here. A broad information, I think that's what T trade we call this. A broad formation. I'm gonna put this too. Okay, so in this case, trading for T trades will be very minimal and risky because the market doesn't have a direction yet. Okay, the market is just bouncing off a fan kind of formation. Okay, we don't have a clear direction yet, and that is the same thing I saw. We don't have a clear direction. Okay, the market is just consolidating, just in a range, in a very tight range. So I'm not looking for huge runs. You're not looking for huge runs on days like this. You're just looking for little scalps, little key areas, and that's where you want to take your profit from. So we went from our daily to our 6-hour, and we looked at our 6-hour and we said, okay, what is happening at our 6-hour? We looked at it and said, okay, Monday low has been taken. We have a candle 1, a candle 2 closure on our 6-hour, and then we also have a key level. Okay, we have a key level. It came into, we have a candle 2, we have a candle 3, this is our candle 4, and we want to see our accumulation, manipulation, and distribution inside this 6-hour candle. And for a lot of people, you can use the Zusi indicator and Zusi 90-minute cycle to trade the 6-hour. Depending on how you can recognize your accumulation manipulation, you can use Zusi. You can use quarterly theory to trade the 6-hour. You can use any firm to trade it. For me, I combine all of them: Zusi, Brogs, JCap to trade the 6-hour. So I come over to my 2-hour, I come over to my 1-hour, and then my indicator comes up, which is let me show you, it's not a difficult thing. See, kills on ICT, kills on pivots, it's a free indicator. So it's nothing special. I just customize it in a way that looks like quarterly theory and Zusi to be able to trade my model using their concept. So I come over to 5 minutes. If you notice, I rarely use the 15 minutes and 30 minutes. I don't. I rarely use them because my swing highs and lows for the 5 minutes is enough. So I rarely use the 15 minutes and the 30 minutes. Once in a while I do if I can find key level with the 5 minutes. So that's basically it. We're looking for short, quick scalp. So if we're trading based on it, we have our 6-hour open. This is our correlation. We want to see some level of manipulation. So we had to find our manipulation inside this previous 2-hour candle. The market came and it took this previous 2-hour candle low and it go over so you can see. So you see this is the 6-hour open. We have to find some level of manipulation. And sometimes the market won't manipulate, it just goes high and you created an SMT. But you need to be able to recognize it. The market's not creating a manipulation. You must find some level of manipulation, even if it's the 1 hour inside the 1 hour. So the market can as well do this. It might as well not come down to this 2 hours to take, but you need to find some manipulation. So we're at least expecting manipulation to happen with the 1 hour. So the market can as well take the 1 hour as this level of manipulation before going high. We just want to see that manipulation, that's liquidity sweep. So thanks everyone for watching. I'm very grateful. I know this video is long, but this is how trading really is. Sometimes you just see the edited video of how I made this, how I made that. This is how it takes. This is what it really takes. You get to see those videos where we put everything in a speed version and you just see the result. But if you really want to trade and be consistent, you need to be able to be patient and read the market exactly like this based on your own model. Thanks for everyone for watching. I hope you have a great day and go out there and enjoy the rest of your day. Stay positive. Trading is tough, but the moment you can nail your strategy, the moment you understand your strategy, it becomes way easier. It's like every other thing in life. The more you do it, the more easier it becomes. Stay positive. Don't let anyone discourage you. Remember, it's you versus you and no one else. It's you versus you.